What's up, guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. All right, so we are going to have a look at the higher time frame for some analysis in preparation for the upcoming trading week. And I'm going to start on the weekly for the dollar index. All right, so let's have a closer look at what's been going on in the price action. So as you can see, we've had about, I think this is 10 or 11 straight green weeks. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight green weeks for the dollar index. So if we look to the left a little bit, we had these equal lows. So we know below equal lows or below an old low is where the sell side liquidity will reside. And liquidity on a weekly time frame is known as major liquidity. So you could expect a large move to the upside after you dug into the sell side liquidity. And as you can see, we had this run up for 11 straight green weeks on the dollar index. All right, so they tapped into the sell side liquidity, then started to aggressively move away. And it looks like the target for them was these equal highs. So this is our relative equal highs or buy side liquidity on the weekly chart. Okay, so now as we can see, they came into the buy side liquidity. It does not look like it's currently displacing above this high. So that tells me that there could be a bit of a retrace back to the downside in store for the dollar index. Let's also pull a Fibonacci from this low to the high over there. Move this to the side. Right, and then I also want to pull one from the top to the bottom. I just first want to remove the extensions, make the equilibrium a little bit more visible. Okay, let's see where it went to for the leg down. Okay, so it just did not make it towards the equilibrium. So we might still see it just touch that equilibrium before retracing. Gonna delete this one. All right, so to me it looks like definitely a little bit of a retrace in order for the dollar index. So if you look to the left a little bit, the very last higher low that we had was this one right here. So we have the low and a higher low on this side and a higher low on that side. Okay, so sell side below this. So they could bring it back, knock out the sell side liquidity below this low, and then push it back to the upside. We also have this order block right here. So this is the consecutive down close candles. And this aligns perfectly with this low as well. Let's just extend this line. The weekly order block. Right, and that's also right there in alignment with the equilibrium. So that level is right at 102.921. Right, and then right here is an imbalance on the weekly. Okay, and a bearish fair value gap is known as a SIBI. So a sell side imbalance, meaning it offered more sell side than buy side. So it's a sell side imbalance, buy side inefficiency. Okay, and then we also have a high inside of the fair value gap. Okay, so buy side liquidity above the high. So just looking at this chart, And also taking in consideration what the momentum master B is indicating, most of the oscillators is extended, telling us that a retrace is in order. And as we can see, we did not really displace above these highs, so it looks like they are gonna essentially bring it back towards this bullish order block into a discount and then push it towards the weekly fair value gap. And the fair value gap starts at 107.274 and it ends at 110.426. Okay, let's get that Fibonacci for the impulse leg to the downside. Okay, so we have the equilibrium almost in alignment with the start of the fair value gap. And then we have the Fibonacci golden pocket and the 706 inside of the fair value gap. So I think we definitely come back just towards the discount area and then they push it back into the fair value gap to reprice this imbalance. I want to quickly add the midpoint of the fair value gap on the chart as well. All right, so the mean of the fair value gap is right there at the Fibonacci golden pocket. So I think we get the retrace into the equilibrium and then up towards the weekly fair value gap towards that Fibonacci golden pocket at 109.026. Okay, so that's the weekly. So let's go down one time frame to the daily. Okay, so just looking at the momentum master B on the weekly and the daily, it looks like price action needs to reset to the downside a little bit to reset all of these oscillators. I'm gonna see where all the lines disappear to. Okay, so now we are on the daily chart, and on one of the streams during the week we said that price action came to the top of this bearish order block and then got a bit of a rejection to the downside. Let's zoom in a little bit. Okay, so we had a little bit of an imbalance right there. So it already traded into it and then back out again. Okay, so it just dug into the discount area, and this is a reversal dragonfly doji candle. So this is an indication of a move back to the upside. So we are more bearish on the weekly chart. So this tells me that they perhaps just bring it into this buy side liquidity pool. So basically knock out everyone that went short too early, and then just perhaps touch that equilibrium. Where's the equilibrium? I want to see where that is in relation with the daily chart. So it's this line. Okay, so we have the buy side and the equilibrium right there. So maybe something like this. Just knock out the local buy side right here into the equilibrium. Then if we go back to the weekly, then perhaps this little bit of a retrace that we identified on the weekly chart. Right, and there's definitely a bunch of liquidity being built up below these lows. We have a low right here, a low right here, so relative equal lows. Then we have more relative equal lows right here, more relative equal lows right here, and then there as well. So there's a bunch of internal liquidity pools for this leg to the upside that they can go and attack and retrace back into the order block before pushing the price back to the upside. Okay, so just to recap, the weekly indicates a retrace back to the equilibrium at around 103. The daily also suggests a bit of a retrace, but potentially after a liquidity rate of the liquidity above 106.839, just to go and touch the equilibrium and then move down. Let's have a look at the 4 hour. Yeah, I just want to see, let's pull a Fibonacci from the high to the low. Okay, so the 4 hour is telling us that that the buy side liquidity above this high will likely stay intact. And the reason for me thinking that is, so we had this leg down, so it broke bullish market structure on a 4 hour. So we are now kind of in a bearish market structure. Then we got to retrace back to the upside, but it looks like it is getting rejected right at the equilibrium. So we can see that touch and then move down. And it looks like it is losing upwards momentum right there at the equilibrium. Just one thing to take note of is that we have this imbalance right here. So just something to take in consideration is that they might just tap it into the imbalance before taking it down. Okay, so far, taking in consideration all of the analysis from the weekly and the daily and the 4 hour, it seems likely that that is the high kind of for now. You might get a bit of a move the upside just to rebalance this area and then continue to the downside. Yeah, so I think this dragonfly doji candle will take us to the potentially to the imbalance on the 4 hour. Otherwise we just roll over from here and start to move into the liquidity pools that we identified on the daily chart. So below these lows, relative equal lows, here we have relative equal lows, relative equal lows, and a nice low right there. So that will be all of the internal liquidity for this leg to the upside. All right, let's have a look at the Nasdaq. Start on the weekly. Okay, so for the dollar index, it looks like there's a slight retrace to the downside in order for the other assets to move to the upside a little bit. Okay, so let's start on the weekly chart for the Nasdaq. So if we look at the oscillators, they are all basically oversold and looks ready to make a push to the upside. Then this leg down for the Nasdaq took us back into this imbalance. So just touched it and then started to move away. And then if we just quickly go down one time frame, we had the relative equal lows on the daily right here at the top of the fair value gap. So that is a rate of the sell side liquidity. Okay, so this leg down on the weekly took us into liquidity and into the fair value gap. And now we've created another imbalance right there. Okay, so just taking consideration the information on the weekly chart, because we took the sell side liquidity and we got the strong action out of this fair value gap. It looks like a bit of a move to the upside is in order. So price action moves from sell side to buy side. So there's buy side liquidity right there. So this is going to be a major liquidity pool because this is a SI high on the weekly chart. Okay, so let's just label this. So this is a weekly sell side imbalance, buy side inefficiency, fair value gap. Okay, so this was on Friday, and at the start of Friday, the trading session on Friday, we said that we came into the sell side, started to move to the upside, and it seemed likely that we take out the previous day high into this little imbalance that we had identified during the course of last week. Like that blue. Okay, so have a look at the oscillators. Okay, they look ready for a push to the upside. The only bearish indication is the fact that the money flow oscillator is above the RSI. So for bullish conditions, we want to see the money flow below the RSI and far away from it. So one bearish indication right there. All right, so seeing that we came into this sub fair value gap, took out the previous day high, so that is liquidity above the previous day high. To me, it looks like we first, during the course of tomorrow, come back into the previous day low, which will be Friday's low. Okay, so previous day low is at 14,811. All right, so I think all right, so we know there's another imbalance right there that has not been filled in yet. And right in between those two fair value gaps, we also have a volume imbalance. Make that red. Okay, so I still think it's growing up into this area, but it will likely first want to come down to take out some sell side liquidity below the previous day low before expanding back to the upside. So I think definitely for tomorrow, move into the previous day low and then potentially seeing that leg towards the upside, back into this fair value gap that we've already filled in, and then the weekly one, which is the whitish gray one. Okay, let's have a look at the 4 hour. Okay, so this is the previous day low. Okay, so here we have an imbalance. Let's see if it touched into it. Just barely. Okay, so the 4 hour is getting extended. The momentum and the strength is pointing to the downside. And then we have the money flow above the RSI, which is a bearish indication. So on the next candle, they will likely start to curve to the downside. And that is in confluence with the daily chart suggesting that we come down to take out the previous day low. Okay, so the 1 hour looks like it wants to make a push to the upside, but if we have a closer look, just move this. Okay, so this is the 4 hour fair value gap. If we have a closer look, there's relative equal lows and they are exactly equal. So this will trap traders, so they will see this as support and they will put their stop losses below these lows. And we are already printing a high right there. So we have a high on this candle, a lower high and a lower high. Okay, so relative equal lows means there's sell side liquidity below the lows. Okay, so this tells me we'll come and sweep these lows into that 4-hour fair value gap before expanding it to the upside. Okay, so the 4 hours definitely not went into that fair value gap. And considering we have the liquidity below these lows in that fair value gap, it seems very likely they first sweep these lows before pushing it to the upside. Alrighty, so that's been my kind of pre-market analysis. One thing I forgot to do is just quickly go through the economic calendar. So tomorrow we have the red folder high impact news at 10 a.m. The ISM manufacturing PMI. I honestly have no idea what that means, but it brings volatility into the market. We want to just be aware of that. And then more red folder news at 11 a.m. So the Fed Chair Powell speaks. And then on Tuesday we have the jobs opening at 10 a.m. And then 8:15 on Wednesday morning, we have the non-farm employment change. At 10 a.m., we have the ISM services PMI. On Thursday, at 8:30, we have the unemployment claims. And on Friday morning at 8:30, we have 3 red folder events: the average hourly earnings, non-farm employment change, and the unemployment rate. So lots of volatility for us. Lots of opportunities in this coming trading week. You just have to be careful and be aware of these times of the day, so you don't have any open trades leading into this. So we normally take the trades right after the high impact news events takes place. All right, so thank you guys for tuning in today. I will be back tomorrow for the New York afternoon lunchtime session to do our analysis in preparation for the afternoon session. So that being said, thank you guys very much, and I will see you in the next one.